Good morning and a warm welcome to everyone joining us today for a webinar on my CPE. My name is Monica and I'll be your host for the session. I'm joining you from Houston, Texas. Before we begin, I hope everyone is safe and healthy. As we get started, please ensure that your audio and video are working properly. You should be able to see the screen and hear me clearly. In case you experience any technical difficulties, please let us know in the chat or Q&A panel, or you can also reach out to us at support@my-cpe.com. Well, we are excited to have attendees from all over the world, so please take a moment to introduce yourself and let us know where are you joining us from. Whether it's a city, state, or a country, you're most welcome to my CPE webinars. Right, I see the responses rolling in: Seattle, California, Los Angeles. All right, I see many responses from our attendees, and I thank you again for joining us today for this webinar. I appreciate everyone for joining us today and supporting our One Credit, One Meal social initiative, through which we donate 1 meal to an initiative for every credit earned. By participating in this webinar, you're making continuing education more meaningful, and we appreciate your commitment to this cause. Please note that, as per the regulations, you're required to remain logged into the session till the end and answer all the polling questions. An evaluation form will be sent to you within the next 24 hours after the completion of this webinar, provided you've answered all the polling questions. Well, this is an interactive webinar, everyone, and we encourage you to ask any questions you have in the Q&A panel. We'll do our best to address them at the end of the webinar if the time permits. If not, then rest assured that you'll receive the answers via an email within the next 24 to 48 hours. All right, everyone, join me in welcoming our presenter, Franco, for today's presentation. I want to introduce you to Franco Massaro, Manager of Finance Solutions Engineering at Nakisa. With a BComm in accounting from Concordia University and over 10 years of experience, he specializes in business, accounting, financial optimization, market analysis, and performance evaluation. Franco's expertise also includes developing process maps and decision matrices to improve operational efficiency, reduce duplication of work, and increase revenue. His passion for financial transformation and extensive accounting experience across various industries make him an exceptional advisor for clients aiming to enhance accounting operations, achieve financial goals, and drive business success. Franco, thank you for being with us today. And without any further ado, the stage is all yours.
Thank you very much, Monica. Welcome, everybody. Good morning, good afternoon, wherever you are in the world. It's a pleasure to be here. And it'll be a pleasure to be with you for the next hour throughout this webinar. Just to elaborate a little bit, the webinar is titled Mastering Lease Accounting and Audit in a Digital Age for IFRS 16 and ASC 42. So what we'll actually focus on is essentially what the effective audit methods would be once, now that we are in day 2 of IFRS 16 and ASC 42 compliance, essentially leasing, right? A little bit more about myself, just to elaborate. I've worked in fixed assets for the past 10 years. I've been in corporate finance for the past 12. And that being said, I'm actually very passionate about anything CapEx, OpEx, but more so when it comes to automation and digital optimization. So it'll be a pleasure to actually discuss what I believe are the winning and effective methods of an effective month-end close, an effective audit, with the goal of essentially just reducing that month-end close perspective and streamlining the entire operations, the accounting operations, when it comes to lease accounting. So pleasure to be here. We do have an agenda, very brief. The first thing I'll do is I wanted to re-highlight the road to compliance. So essentially for public corporations, it was 2019. For private, it was late 2021, early 2022. So it's relatively still new. That being said, the leasing new standards of IFRS 16 and ASC 42 are still very, very pervasive and very material. That being said, it's one of the biggest changes that ever has taken place in both standards. So it's important to actually re-highlight or recap essentially what brought us here. I'll then talk in the second section a little bit about the compliance and reporting in practice. So essentially, what are the methods or what are the mechanisms and output that you require for your 10Q and 10K and essentially how to get there. I'll then segue right over to a month-end close and audit considerations, highlighting specifically on the key considerations that anybody should take when it comes to their month-end with respect to lease accounting. By then, I'll migrate over to what I believe are the winning strategies for an effective lease audit, in addition to a month-end close. So really recapping everything that we've spoken about and re-highlighting what I believe in the digital age are the winning strategies or winning key elements that or actions anybody should take, followed by a Q&A, or we'll leave the Q&A for the end, and I welcome anybody's questions. Fantastic. So a road to leasing compliance and the effect on reporting. So essentially, again, this is a bit of a recap. So if anybody in reporting, anybody in accounting knows all this, but let me just recap it because it actually obviously is going to transition very well into everything that we're talking about. So prior to IFRS 16 and ASC 842, the standards were AIS 17 and ASC 840. Essentially what this meant was keeping leases outside the balance sheet, right? You still needed to disclose all of your notes to the balance sheet, but that being said, you didn't have to capitalize them, such as what the new standards of IFRS 16 and ASC 842 actually dictate. With these new standards, as you know, you need to capitalize the leases, and the classification of leases also differ, right? So from an ASC 42 perspective, you still have operating, but instead of having capital leases, you have what's called finance leases. In retrospect, IFRS 16 simply just has finance leases, and there are variances when it comes to the actual reporting of these two types of leases. Now, what's important here is the impact that this actually had within your entire accounting operations and the entire process. So there are new processes you need to actually ensue, or you needed to ensue to adopt, essentially capitalizing the leases, the accounting, the schedules, how to rebalance all your different GL accounts between your sub-ledger and your main ledger, training, obviously change management. You need to actually understand not only what the standard means, but how to actually upstream all of these new functions within your accounting operations. Upgrade your technology. This is definitely one of the winners, or one of the key elements that I'll be actually focused on throughout the presentation itself. Simply without actually upgraded technology, you will have, I want to say, a little bit more difficulty with respect to actually hosting a subledger to automate all of your different processes. And I'll talk about this throughout the entire presentation. Definitely need more detailed reporting requirements. So essentially, there are requirements that are needed for the notes to the financial statements that are actually labeled by both standards. So that being said, there's less ambiguity with respect to what is actually needed, in addition to a technical accounting assessment. Now, understanding what IFRS 16 and ASC 842 beyond compliance is obviously going to be key, right? So we've already went through the actual journey of becoming compliant. Now it's actually reanalyzing and assessing from a business perspective what this means and what are the synergies between operations, financial planning, and compliance, right? That being said, balance sheet implications. Obviously, the main function, or I want to say the main facet, is all your lease contracts have actually come onto the balance sheet. This affects your financial ratios, can also affect debt covenants. These are actual criteria you need to continuously gauge from an ongoing basis, simply because there are synergies within your entire business organization. And this is what I mean by going beyond compliance. Simply, it's beyond just reporting. And that's one of the things, including lease versus buy or resource management alignment. This is also critical, essentially because now that you have different elements, different GL accounts, and different specific types of facets within that lease asset and liability, you might want to re-envision or reorganize how you actually include your decision matrix for lease versus buy. Now, I'm not saying this is the main driver, but this can be a driver, and this is essentially one of the changes that have actually taken place beyond compliance. So having that information actually hosted in one simple place for any team to actually be able to obtain it is definitely going to be key. And the same thing for FP&A and operation decisions that led to compliance, right? So from a forecasting perspective, you're not just forecasting payments and expenses, it's beyond just the P&L. There's balance sheet implications, and as I mentioned, financial ratios and debt covenants. The important thing beyond compliance is you need to understand what the compliance's role is, the accountant and reporting's role, to understand the divergences between lessor and lessee, implicit rate versus incremental borrowing rate. That's one key element, right? Understanding also how operations and financial decisions actually affect you as being compliant. So for instance, I'll give you one example. If you're entering into a lease contract that you're subleasing, from a lessee or lessor perspective, there are two different methods that you need to adopt when it comes to reporting, the reporting perspective of the same exact asset. So understanding that is what an accountant, a lease accountant, actually needs to understand from his role and his perspective. Finally, from a scalable and sustainable leasing solution, it's important to actually have a solution that's both scalable and sustainable to, again, leverage it for ultimately more actions, such as modeling for discounted cash flows, leverage buyouts, mergers and acquisition, CapEx versus OpEx, tax planning to be considered, et cetera, et cetera. These are all actions taken by any business that effectively affects your leasing portfolio. And having a solution to be able to not only host, but be able to capitalize on all these different financial or these business decisions is definitely going to be key. So that's one of the things I really wanted to highlight beyond compliance. Finally, I just wanted to quickly talk a little bit about the strategy beyond going live. So the road to compliance, this is already taking place. There's activities, data abstraction. We've already gone live, so you need the accounting, reporting, and your obviously your schedules with a successful month-end close and process, et cetera, et cetera. This webinar will talk about beyond just a simple, day-to-day, I want to say checklist from a month-end close perspective. We are now entering day 2, and essentially what this means is that it focuses on operational excellence and automation and scalability. This is very important because lease contracts change on a daily basis, or can change on a daily basis. That being said, when you extract that and exponentially spread it across all the different types of leases you have, a system to be able to automate, but also handle that from a scalable perspective is going to be key, because again, the compliance aspects actually follow suit based on what day 2 action or day 2 event actually takes place. For instance, example, impairment is a big one, right? It affects the ROU asset, not the lease liability. How do I record that? How do I report? And how do I maintain it is going to be key. And finally, this is probably definitely the most important thing. All of this leads to helping your business strategy. Leveraging leasing data as part of your leasing strategy is very key in the digital age, which is the focus of this presentation, in addition to harmonizing your strategy with technology. Before moving on, I just wanted to actually highlight at this point opportunities that we've actually found into the market. Just quick quotes, one of them from PwC. They mentioned that 10 to 20% of office real estate stock needs to be removed and repurposed. Now, as we know from a leasing perspective, real estate and equipment are probably the 2 biggest asset classes from a balance sheet perspective with leases. A 10 to 20% shift of office real estate is really going to be huge with respect to having a system or systems maintained in order to be able to compliantly report for all these changes. Similarly, the Digital Journal actually quoted that lease accounting software is expected to grow at a cumulative annual growth rate of over 10% between 2023 and 2030. So this is current information. That being said, most of our companies that we've actually working with are leveraging leasing data from a forward-looking perspective beyond just compliance. And that's the reason why these actual solutions are growing, because they're becoming more and more powerful to be cross-functionally useful, right? So we're moving away from, I want to say, functional usability, but business usability. Harvard Business Review, actually relevant to what we're talking about, actually mentioned major cloud investments upward of 60% in the next 4 years for hyperscalers. This is very important because going cloud is definitely a trend. Having all of your data set, all of your data sets and your solutions on the cloud enables multiple different users to log in anytime they need. With that same data set, use again cross-functionally. A lot of major investments are actually, we've seen to actually go there. With that being said, it's a very important area to actually highlight. Finally, last quote, Forbes actually listed opportunities in 2023 for accountants, focusing on data, moving beyond financial analysis, but more towards data analysis. Learn how you can increase or use data with a digital perspective to increase your system and process efficiencies. So again, moving away from that waterfall, I want to say task management, but more to being agile by using data, leveraging data and leveraging technology. This is important because it's actually shifting the way lease accountants actually conduct their job. I'll move on to accounting compliance and reporting in practice. Most of this is definitely recap. I just wanted to highlight it here because it is important. So one of the main changes from an initial recognition perspective is essentially at initial recognition, the lessee, from a lessee perspective, I'll play the role of a lessee or tenant, you need to recognize a lease liability. Your lease liability is your present value of minimum lease payments. So the way you actually present value or you compound this is with an incremental borrowing rate or contract rate beyond or extended within the lease life cycle or the lease term, well, actually the lesser of the lease term or the useful life of the asset. In retrospect, the ROU asset, so your asset perspective, is essentially taking your lease liability, so the present value of minimum lease payments, subtracting incentives, and adding initial direct costs and prepayments. So this is the major change that took place, essentially bringing these 2 elements of these new GL accounts into your 10Qs and your 10Ks. From a lease payment perspective, I mentioned lease liability is the minimum or the present value of the minimum lease payments, but what constitutes a minimum lease payment? So what is included into your lease liability? So number 1 is your fixed lease payments. Every single fixed lease payment that you actually have stipulated into your lease contract has to be included as a minimum lease payments. There are also variable lease payments. So this can actually depend on what your accounting policy is. Typically, variable lease expenses are what we call non-lease components. So that being said, there's still payments that need to be conducted by the lessee to the vendor, lessor, landlord. That being said, they're not included within that minimum lease calculation. So it's important to distinguish one with the other, but at the same time, they still need to be paid. So harmonizing that information is critical, right? Another one is your guaranteed residual value. This is essentially what is left over at the end of the actual lease life cycle. It really affects your depreciation and accruals. Termination penalties. So if you do have a dollar amount that you need to pay from a penalty perspective, harmonizing it and actually paying it is important. Purchase options. This is also very important simply just because a purchase option reduces the actual lease term. And whenever you engage into a purchase option or change the likelihood, you definitely need to reduce the amount of term within that lease, and that affects your accruals and depreciation, in addition to initial direct costs, prepayments, and incentives. The important thing here is that these elements feed or may not feed the ROU asset or lease liability. This really depends on what your accounting policy is. In addition to it depends on what action every user is actually taking. For instance, your purchase option likelihood. Being able to understand or compliantly have this hosted into a system is definitely key going forward prospectively and to be scalable whenever new leases actually come in, especially if you engage in any sort of mergers and acquisitions. This is important to actually understand and master definitely. Lease modifications and reassessment. So, we've talked about initial recognition. We spoke about the lease payments. We spoke about the importance of understanding what is part of a minimum lease payment. That being said, from a sustainability perspective, what happens when your lease actually changes, right? You can have modifications or reassessment. So a modification actually takes place over here. It's essentially certain amendments to your lease components. So an additional ROU asset, if you need to extend your lease term, perhaps fully or partially terminate a lease, change lease payments, et cetera, et cetera. You may also have a reassessment. So a reassessment is essentially changing the likelihood to actually exercise a specific option. That's a common example. So option to renew, extend, et cetera, which will all lead to essentially a remeasurement. So basically a remeasurement of the ROU asset and lease liability based on what type of modification or reassessment is taking place. The important element here that I'd like to actually extend to the audience is essentially anytime a modification or reassessment takes place, you need to reassess what your asset or liability is with the current IBR incremental borrowing rate or contract rate at the time of modification or reassessment. This is key, especially from a scalability perspective. That being said, should you have multiple modifications on a month-to-month basis on multiple different leases, having to understand or a hosted area to have all these different incremental borrowing rates is definitely going to be key because it affects your asset balances, your asset and liability balances. Same concept for foreign exchange, right? This is even more so important. I'd like to elaborate a little bit for lease accountants, simply because a lot of times, or oftentimes, I should say, we receive that modification or the version information after month end. So what do? I need to actually create a catch-up entry or perhaps roll back that lease to apply that modification with that spot rate of that foreign exchange based on the time of that modification. So you can see how this day two type of sustainability is definitely very, very important. And I just wanted to highlight that right over here. And understanding a system to be able to host that is really going to be key. Finally, this all leads to disclosure reporting, notes to the disclosure report. I just wanted to highlight very simply what is required in your 10K and your 10Q from a note perspective. And the first one is your lease maturity analysis report. Essentially what this does is it encapsulates, all the discounted cash flows per asset class. Essentially it splits it for the next 5 years and then that after. And again, these are undiscounted cash flows, excuse me. This is important because it's actually required for your reporting standpoint. And it's important to actually have a system that is able to be configured per asset class, because that's essentially how you need to typically actually spread it or showcase it in your notes of the financial statements. There's also a lease liability report, which is essentially the present value of minimum lease payments and the roll forward. So at commencement date, the movement to the end date, which is very similar to the asset roll forward. It's just the asset perspective. So you have your initial measurement, the movement all the way to the end date, which includes any depreciation, anything that could actually affect the asset, impairment, et cetera, et cetera. So beginning and end date typically within 1 year period. We also have here the weighted average discount rate and the weighted average lease term. This is simply only relevant for ASC 842. So there is a distinguishing point. This is only for ASC 842 and not for IFRS 16, whereas the rest of the actual disclosures are IFRS 16. So in this case, as I mentioned, or as you may know, ASC 842 has 2 types of lease classifications, operating and finance leases. Essentially what this report does is captures and calculates per asset class the average discount rate or lease term for both types of lease classification. Finally, we have our cash flow and expense report. Again, this is linked to IFRS and ASC 842 as well. Essentially, it just showcases all the different types of cash flows and expenses linked to asset classes, but really dictates and labels what types of expenses are linked per the asset class. So it's important here, or it can be actually a key competitive advantage to actually bring in also your non-lease expenses, right? Just to showcase or just differentiate them from a reporting perspective, just so when you actually conduct the reconciliation, you know what your cash outflow is, and you also know what has been applied to your asset and your liability versus what was just kept onto the P&L. So that's why it's very important to actually have a reporting system that's complete, but at the same time harmonizes and really captures all that data in one central location for not only compliance, but also for reconciliation and analysis furthermore. Complexities of the accounting standards. I highlighted this pretty rampantly throughout the presentation, but an initial measurement is an understanding what the lease contract actually means. So it's reading through those contracts, having that data abstraction and actually capturing in different buckets all these different types of elements at initial measurement. Subsequent measurements, your payments are your depreciation, accruals. You definitely need to reclassify your long-term to short-term. This is required, and your interest accruals. Event management, as I mentioned, is very critical, especially if you need to stay sustainable and scalable, and if you have multiple different events or multiple different modifications that can take place. Also, events really, I want to say, affect your leases from the RU asset and lease liability perspective differently. So from an impairment perspective, there are divergences between IFRS 16 and ASC 42. Essentially, IFRS 16 allows an impairment gain, and it also only affects your asset and not lease liability. Having a system that is not only focused, but compliant with all these different events is going to be critical, again, for sustainability. And from a quantitative disclosure perspective, as I mentioned, we listed all the different types of disclosures right over here. Having this at your fingertips is definitely going to be critical, simply just because this goes beyond simple just compliance. So we're moving beyond, where it's really aligning your entire business, specifically from a reconciliation perspective, streamlining your month end, really trying to close that period gap, in addition to analytical reporting, understanding why am I spending so much more on one lease in one area versus another. This is information that can definitely be leveraged within multiple different teams. I'll move on with what I consider are key activities for successful accounting control and audit before moving on to the first bullet question. So the first one, I just wanted to re-highlight again what sustainable accounting and compliance in your portfolio. What are the activities that needed to be adopted or have been adopted within the entire time frame of going live with the new system? And the first one, as I mentioned, is trainings, right? You definitely need trainings or monthly technical trainings to deep dive, understand what the actual standard means and what the changes are, right? You also have your data abstraction and quality control. So essentially, this is your first step, and training is second. So your abstraction of your lease contract not only has to be complete, but definitely has to be streamlined and also has to be understandable by multiple different teams. Essentially understanding what those lease clauses in, digitizing them, bringing them, posting them, and harmonizing them, but also have a data quality check. This is also important simply because contract names and addresses can actually change. For instance, an address for a real estate perspective. Having that quality check is something that is sustainable and you definitely need. Disclosure report, approach, drafting mock disclosures. It's typical and it's recommended to actually do them 1 year in advance, schedule them and have them at your fingertips to understand what the qualitative and quantitative effects will be on your disclosures. Drafting your accounting policy with practical application. This is also very important. And that being said, embedding your accounting policy within a specific application, especially when it comes to the lease and non-lease election. So essentially, if you had, for instance, a net lease versus a triple net lease, well, your accounting policy essentially just dictates how you account for all these different types of leases. So for instance, if you needed to have a triple net lease and basically include all of those, CAM insurance into your minimum lease payment, you do so, versus a gross lease is handled a little bit differently, and also embed your materiality threshold. System configuration is definitely key. Having a company or entity level configuration established is definitely a competitive advantage and definitely something that should have been done simply just because you're now mapping all of your subledger or your system with your main ERP's actual data sets. So anytime anything takes place, for instance, an intercompany asset transfer or a mergers and acquisition, you're relatively actually reassessing it or reshifting it with the correct cost centers and profit centers. And you don't need to actually reinvent the wheel with respect to finding where those information points are. Definitely will help in making your reconciliation much more streamlined and the month-end process closed a lot quicker. Accounting processes, this goes without saying, identifying all your different GL accounts, your transition accounts as well, and entries. if you need a clearing account, and also your ongoing processes. And operational processes, just this, from an ongoing basis, data abstraction, lease identification. This can definitely, as I mentioned, be used or leveraged within cross-functionally within your organization for, let's say, a lease versus buy or structured types of agreements. Important thing here, amongst all these different types of elements or activities to adopt, is having established controls. So not only a workflow identified and who actually has access to what, but ITGCs, audit reports, and also audit trails of any time anybody needs to actually conduct anything. With that being said, I spoke greatly about the road to compliance, the requirements to being compliant. I spoke very much about the sustainability of leasing compliance. That being said, within moving forward, I really want to focus on critical lease audit considerations and activities to adopt or to consider for your month end and for your audit. And the first one is the impact of inflation and indexation on lease contracts. This goes without saying, definitely this is a time where inflation is rampant globally. But with that being said, inflation is different in different countries, right? Understanding the inflation rate per type of leased asset, in addition to per country, or however you need to actually identify it, and also per expense type. So your base rent, in addition to perhaps a non-lease component, might have different inflation rates, right? Being able to understand them and capture them is something that is key to consider from an audit perspective, especially that IFRS 16 and ASC 842 do have divergences in both methods. So being able to capture the same information once, but reported from an accounting schedule and a disclosure report perspective differently, but compliant with both standards is key and definitely needs to be considered. The second one goes without saying is your discount incremental borrowing rate or Forex application. Being able to have a flexible IBR or contract rate is key to host within a specific system, because as I mentioned, anytime modifications take place or reassessment, the IBR rate that's applied is going to be at that moment in time. Now, the factors that are applied with it is your asset class, can be your lease term, can be country, can really be as flexible as your organization actually establishes it, essentially mimicking what a fixed asset would be. So having the flexibility to be able to have that into application is key. And the same concept for Forex application. Again, the translation actually takes place differently for different types of events. For instance, a reduction in scope of asset or an extension of a payment. There's spot rate and weighted average rates that you need to consider. Being able to embed that is definitely going to be key. Short-term and low-value leases. I didn't speak too much about these, but these are essentially leases that are still kept off balance sheet. So essentially mimicking the old standards of IAS 17 and ASC 840. The important thing here is understanding the timing of specific events that might affect that. So for instance, if you had a short-term lease that is predominantly less than 1 year in time frame, however, you had an extension, so it's now 2, 3, maybe 4 years long, well, that short-term lease now needs to go on balance sheet. Understanding or having a specific place to host all these leases to quickly shift your accounting and your reporting based on what a business decision was actually made or an operational decision is definitely key from an audit perspective, just because essentially if your lease or short term was extended, well, now it's on balance sheet. So you need that for your audits. Lease event management. I know this is a theme throughout this entire presentation, but it's critical, especially the timing. Understanding the current, currently anytime an event takes place, it's not only affecting your current period, but it's going to have an impact beyond your fiscal period. So if essentially an event takes place today, well, it's actually affecting the rest of my lease payments. So that's definitely important from an audit perspective. Materiality threshold. What I deem key or very important is the audit transition expenses of your materiality threshold per what your accounting policy is. So as I mentioned, you need to pay for every single expense. That being said, not all of them might actually affect your RU asset or lease liability or your IFRS 16 compliance or any aspect of your IFRS 16 compliance. So embedding your materiality threshold is definitely going to be key. Finally, evergreen leases. This is definitely critical in proper management and compliance reporting. Essentially, evergreen leases, to define them, is month-to-month leases that have actually turned evergreen once the lease term have actually expired. Now, that being said, it is very common for these evergreen leases to fall back under the IFRS 16 or ASC 842 scope. But that being said, having an enablement or system to be able to still capture all the different payments that are conducted on these leases on the P&L to eventually re-bring it back onto the balance sheet per what your accounting policy is definitely critical and definitely will reduce your month-end close and important from an audit consideration. I spoke a lot. We're at the first polling question. So Monica, if you don't mind launching the first one, that would be great. So as a recap, bear in mind, you need to in order to actually earn your CPE credit, it's required to answer all 3 polling questions. We'll leave it on for roughly another 45 seconds. Perfect. I see answers coming in. Maybe another 15, 20 seconds. Perfect. So I think we'll end the poll now. Fantastic. So, well, actually, the polling question is, which of the following best describes your current situation regarding transition to ASC 42 and IFRS 16? It's a pretty mixed bag, but essentially, you know, a lot of you already have the planning or transition that has not been, well, 3 of you have not actually started. But it's actually an interesting type of results. It's very, very mixed. So I appreciate that. I'll move on now. So we spoke about the road to compliance. We spoke about the elements to actually report from a compliance perspective. Now we're really going to actually harmonize or really focus on month-end close and audit considerations, and essentially what I deem is key. So the focus of this will definitely be to supplement what your current checklist is from a lease close perspective, and definitely streamline the close and aim to complete it in less days than, you know, you can aim to complete within 2 or 3 days. So by checklist, what I mean is, you know, this goes beyond the focus of just checking your accounting schedule, posting payments, accruals, depreciation, then importing into your main ledger, reviewing your AP, reviewing your GL accounts, reviewing your fixed assets. Depending on what your organization is, you already have this checklist established. I really definitely want to speak about moving beyond that for a winning strategy, which is going to be the next section, for you to be able to reduce your month-end close period time, but at the same time, improve your audit process. And the first one is centralizing records. I'll speak a little bit about that. Step number 2 is going to be reconciliation of output sources. This is very, very important, just because once you centralize all your records, you'll be able to reconcile all of your different output sources. And I'll explain what that means when I get to that section. Another element, or the third one, is the cutoff at month end, and also the Forex and IBR implications that'll lead directly into the sustainability and scalability aspect that definitely leads into your 10Q and 10K reporting. The first one I'll talk about, or what is key, is the centralizing records. So centralizing all leasing records for quick review and digital reliance in all leasing subledger for action, right? This is easier when you centralize everything to review and audit files, and also easier to audit quantitative derivatives from amendments, right? So essentially bringing all of your different types of files under one specific location from a digital perspective, and also in a PDF perspective, gives you that access to viewpoint that contract much quicker. At the same time, that digital output or that digital input will lead to someone else's output. And that's why it's important to really harmonize all of your different subsegments or different companies or entities in one specific subledger. It's also extremely important to actually be able to configure all your different ERP systems in your subledger at company level. Every different specific type of company or country, depending on how your organization is established, we'll have different vendors, different currency exchange rates, cost objects, asset classes, et cetera, et cetera. And these are all elements that are going to be are very important and required for your 10K and your 10Qs. Finally, data written to your ERP systems. This is data for multiple different accounting standards, journal entries, asset master records. These are essentially bringing in all your GL accounts and understanding which country or which company is compliant with which standard. Bringing all that information in and having that system level configuration at the company or entity level definitely will, to be honest, is the first and most important step, in my opinion, for you to effectuate or to actually reduce that month-end close. Second, reconciliation of data sources. Essentially, what I mean by this is cross-validating the subledger with the main ledger in a methodological and manner in these three main subcategories. So payments and lease expenses, reporting balances, and month-end cutoff. And I'll elaborate on what each of them means. So essentially, at year end, you have your subledger right over here, and you have your ERP system here. Now that we've harmonized, or we've actually brought all of our records into one central location, you need something to be able to derive output from in a consolidated fashion to re-upstream into your EP system, something like a consolidated transaction report. This is essentially what you would need from a reporting perspective. This is critical because it actually defines and elaborates a little bit on the straight line amortization of finance leases, lease versus non-lease indexation, currency applications, compounding, prepayments, IDCs, incentives, et cetera, et cetera. These are all information that your EAP system definitely will need, simply just because a lot of these payments are going to either feed your GL, your AP, or your ARR module, and they don't necessarily actually have to be linked together. For instance, if from a GL perspective, I have an amortization of a specific amount, however, my payment that I'm actually paying includes lease versus non-lease, well, that payment will only partially be applicable to your GL depreciation or accruals, and the other part will literally just be a P&L action. So that's simply what I mean. And also, again, critical having that configuration of multiple systems per GL and per vendor, and establishing transition accounts will be definitely critical from a payments and lease perspective and expense perspective. Reporting balances. So everything actually needs to lead to a reporting balance, right? Essentially, your balance sheet and your P&L have elements that you need to report for, and these are required per the new lease accounting standards. Having a subledger that not only is able to calculate, but delivers in a quick fashion all the different quantitative disclosure reports required. For example, your maturity analysis report, which is undiscounted cash flows. This also enables your organization to conduct analytical and quality reports. Again, we're moving beyond compliance, and this is essentially being useful cross-functioning within different teams as well. In addition to Forex remeasurement and translation methodology. So if you have a gain or loss or a CTA or whatnot, these reports definitely will need, from a roll forward perspective, from A to Z, help you be able to harmonize all that specific output in a centralized location for your ERP system to not only absorb, but also to reduce that reconciliation. And from an ERP system, it's the configuration of multiple systems per asset class. You definitely need your lease liabilities and RU asset balances. An important way to actually perhaps get specific information is through an API gateway or a database connector, essentially just grabbing all that different information for your reporting team to actually conduct quantitative reports in addition to fixed asset management. So fixed asset management is critical from an operation perspective simply because the asset, whether it's leased or owned, is the exact same asset. So linking those is a perfect marriage, right? Thirdly is your month-end cutoff. So from a reconciliation perspective, you definitely need your GL balances and vendor invoice, and you need to establish a translation methodology for your Forex. Also, transfers and posting controls. This is definitely critical. So essentially having a document, translation, and effective date that are not necessarily unique. So to give you an example, happens very often in accounting teams that you receive specific types of lease versioning after your month end, right? So your cutoff was already established. That being said, operations didn't send you the extension or the lease modification from that amendment version. That being said, the enablement in your subledger to be able to not only post that specific type of amendment at one specific date, but also establish an effective date of when that change would have taken place will also be key, because prospectively, you definitely need to apply that in a period that's already been closed. It's also important from a translation perspective. This leads again up to catch-up entries and also internal ITGCs, because you can't have everybody else obviously perform catch-up entries. In addition to return, buyouts, and evergreen leases. You might not know about the return, buyout, or a lease when evergreen from a reporting perspective until after it's actually been returned, bought out, or evergreen. We're not on the field, we're accountants. That being said, a subledger that enables you to be able to backtrack when that effective actual transaction takes place definitely will be key. This leads for your ERP or from your main reporting system to be to go furthermore. Needs to be compliant with IFRS 3, right? That's one example from a business combination perspective. I'm reliant on leasing information, and having all this information being outputted in a subledger is definitely key. Also, I need to establish my cutoff procedures. This goes beyond just the leasing methodology, and also automated task management with a built-in RPA might also be something that's beneficial. What I mean by built-in RPA is essentially on your month end. You definitely do have actions that are repetitive. An RPA can definitely help you. And also for month-to-month timing and lease management. Third critical or key point is essentially establishing cutoff records for Forex and IBR compliance. So establishing a cutoff point, which is critical to consider for Forex and IBR implications, especially critical for catch-ups and rollbacks to consider. But in order to optimize this process and essentially mitigate reconciliation constraints, I believe there are several quantitative and qualitative aspects which definitely need to be implemented. And the first one is company level master data config. I spoke about this throughout the presentation. I need to re-highlight this here. It is critical to align both the main and sub-ledger identically, especially if you have any sort of action resulting in perhaps a transfer or contract change. This makes the process a lot easier simply because you have all this master data config. The second one is seamless integration. Have the enablement to schedule postings, as well as establish unique effective translation dates if need be. As I mentioned in the previous slide, your translation date, your posting date, and your effective date actually might be 3 different dates. That flexibility definitely will be key because now we're actually establishing that subledger to mimic your business environment in real life, which is essentially your main ERP. Third, catch-up adjustments and remeasurements. Goes without saying, the enablement to do this and properly report, remeasure, and translate the correct GL. For this, timing is key. And finally, embedding all this into your ITGCs. This goes without saying, having the enablement to have front and back end audit trails, establishing your own organization's control environment with different workflows will definitely be key. In addition to freezing specific types of companies or entities, this helps any organization not have to re-upstream specific information they don't want to. So establishing that control. From a 10K and 10Q reporting perspective, a lease contract and amendments are definitely, what I mean by this slide, they're rooted from operations. And in order for you to establish or maintain scalability and sustainability, it's best to do so in a one-stop shop within one solution. So to paint you a picture of an example, the operations team, that being fleet management or a real estate management team, has that one lease contract, which sits over here. This exact contract is the same information that needs to lead to compliance. And what I mean by here, by harmonizing specific types of teams for scalability and sustainability, is having some sort of mechanism enabled for these operations team to drive any input and any modification of that lease contract directly into your compliance reporting. So basically having the accountant play the pull role instead of the actual push role. So you're getting information instead of just waiting for it. Will definitely help in a process perspective to reduce that month-end close at month-end. This definitely leads into the next section, which is your 10K and 10Q reporting from a notes perspective. Again, if you have the original driving force in a one-stop shop, being the operations team, that being fleet management or corporate real estate, they're entering all this information. All the accountant needs is to receive it and have an automated fashion to actually conduct the reporting of all the different notes that are financial statements, which definitely leads into your 10K. I'll pause here and we'll start poll question number 2. So if Monica, if you can engage that, that would be great. Again, as a reminder, you need to respond to all 3 polling questions to receive your 1 CPE credit. We'll leave it open for roughly another 30 seconds. I'll take the opportunity to review the chat for any questions. So another 10 seconds. Now, in the poll, Again, the question was, what are your challenges regarding lease audit? There are multiple choices. Pretty widespread, very interesting. Thank you for answering that polling question. This brings us to the last section of our presentation, and essentially this transitions to what I believe are the winning strategy leading into day two. So we're our day two into our accounting compliance, and what I want to focus on right now is essentially what I deem or what I think are the winning strategies or winning key activities to actually adopt, and not simply in being compliant with IFRS 16 and ASC 42, but essentially how to actually streamline your accounting operations in the digital age to really reduce that month-end close and to improve your audit process. And the first one is moving away with manual entries and dual maintenance. I'll then talk about your multifaceted business reliance and speak about audit streamlining and risk mitigation. All this leads to data harmonization and leveraging technology. The first one is moving away from dual maintenance and manual entries. So essentially what I'm recommending is having one single subledger for everything leasing as a single source of truth. So one system equals one maintenance. No longer having two people entering the exact same leasing information twice in two different systems. This removes the risk of error, but at the same time also definitely improves your ROI simply just because you're entering that same lease information once. At the same time, you have one single source of truth, which actually helps any organization run reports to be able to actually know exactly where that information is coming from and helps reduce their reconciliation period as well. Number two is your company level configuration. So this will lead to sustainability and improve your maintenance of one system and also streamline the close. Plus, it's also going to improve your audit process simply just because anytime any action is engaged that actually shifts any sort of lease contract, perhaps transferred or changed, that configuration needs to exist on both different companies. Having everything embedded within your ERP system directly into your subledger is definitely key. Finally, auto transition single data points. So again, as I mentioned, that single source of truth, having the output recalculate automatically. So your RU asset and lease liability recalculate with all different actions that actually take place. For instance, mass modifications, changes in scope, extensions, CPIs. These are all actions, these are all events that take place commonly in lease contracts. Having one spot to enter all those different actions, all those different amendments, which are typically done in the business by operations, leads to accounting will not only change, it will not only change your accounting operations, but definitely this change management will improve your ROI and reduce costs because there's less keystrokes. Also, as I mentioned, mitigates the risk of error of dual entry. Next is cross-functional business alignment, using technology to be agile and using the pull method, right? As accountants, it's predominant for us to actually wait till month end to do the majority of our job, right? Using technology actually reduces that, I want to say, quote unquote, headache. Being an accountant for over 12 years, I know exactly what that means. But essentially, having the enablement to actually bring in all these elements into your system, your IBR contract rate, implicit rate, classification of resources, non-financial benefits, tracking of assets, documentation, et cetera, can also lead to having other functions within your organization succeed, I want to say in a lot less time-delayed manner. For instance, one example is any capital investment decision matrix. Anytime you're actually engaging into a CapEx decision matrix, definitely time and cash flow is essential. Real-time data is required. Qualitative factors need to be quantified and workflow needs to be approved. Same thing for lease accounting impacts, lease versus buy, short-term financing, sale leaseback, value remeasurement, et cetera, et cetera. The point here is that these are all actions that are taking place within the business. These are decisions that need to be made, right? There's decision matrix is levied on these specific actions. This all leads into the accounting requirements or the accounting needs. They're definitely over here. So having the enablement to harmonize all this in a solution will definitely go a long way. The goal here is everything will definitely lead from operations to reporting. This enables you to be proactive and not passive. Finally, audit and risk mitigation or cross-functional workflow. Finally, second last, excuse me. It's to have a complete audit trail to mitigate risk and to help with the audit of cross-functional workflow and audit trail. This is key, right? So essentially being able to centralize any decision. I'm using CapEx and OpEx decisions, but any lease contract decision, having one workflow and one data set established to actually mimic your control environment. So having to send any information to whoever needs to approve it based on whatever action is something that is a winning strategy in 2023 and beyond, but also having enablement to have access controlled levy company-wide and a complete front and back-end audit trail for configs and ITGCs. This will help you be able to conduct all these different actions in multiple different teams. So for instance, your budget approval actually might come from a manager versus initial reapprovals might come from a higher up manager, perhaps a CFO or whatnot. Tracking accruals, actuals definitely can come from treasury, variance analysis, FP&A. So I talked about 3 or 4 different roles within an organization. Having that one established workflow with all your leasing contracts, establish what your access controls, however you actually want them from your company perspective, will go a long way from, and to be honest, I consider this as a winning strategy. Finally, this all leads to my last point. So this is data harmonization, technology in 2023 and beyond. We're moving beyond simply functional analysis or financial analysis. It's data-driven movements for lease accounting. Being able to levy or leverage lease accounting for budgeting and forecasting accuracy. Also having your ear close to the pulse when it comes to industry trends. So custom reports geared to industry requirements, asset trends, et cetera, et cetera. I'll give you one example. For instance, if your asset in a specific type of country typically has, or your lease contract typically is ended earlier, there's options to renew, and the likelihood you can estimate that will probably be engaged. Well, you can actually harmonize that data for you to be able to plan it and even embed some machine learning and AI theory. Technological functionalities, having that open source database, SaaS modeling, API machine learning, et cetera, et cetera. The first step is harmonizing all the different data sets. The next step is to actually establish cross-functional usability. And the next step is embedding more technology into it to actually make it cross-functionally available. So before ending, I just wanted to talk a little bit about Nakisa and why you should choose Nakisa. So Nakisa Lease Administration definitely streamlines and simplifies your lease accounting operations while enabling compliance. And the goal is to have not only robust accounting capabilities, but we also cover all the complex use cases. We're complete and accurate for IFRS 16 and ASC 42, including all your different disclosure reports. We have ERP integration with SAP, Oracle, and any other option of your ERP system in a disconnected mode. We have a knowledgeable team with technical experts, and we offer 24/7 support. But the important thing is that we harmonize all of your leasing data into one solution, accomplishing the goal of multiple different teams in one keystroke. So before ending, I'll engage poll number 3. So I can start that now. And while I'm there, I'll actually check questions in the chat. We'll leave it on for another 20 seconds. Perfect. We can end the poll. Last question was, which integrations would help your lease accounting system close the month and your books? Definitely see the main answer is posting the GLs into your ERP. This is key because everything leads to GL. But the important thing is also the second answer is essentially your AP to your ERP system, just because, again, your GL and AP might be different. I also see there's a lot of answers with lease data synced with the BI solution. That's very, very interesting. Without further ado, I see there are no questions in the actual Q&A. Perhaps I can pass it back over to you, Monica. I just wanted to thank everybody again. It was a pleasure actually presenting. If you have any questions, feel free to reach out to me directly. But over to you, Monica.
All right. Thank you, Franco, for such a wonderful session. And thank you so much, everyone, for joining us today for our webinar on My CPE. I hope you found the session informative and engaging. I'd like to extend a special thank you to our presenter, Franco, for sharing his expertise and insights with us. Your insights have been extremely valuable, and thank you again for this wonderful session. One more important thing, everyone. To obtain your credit certificate, you'll receive an evaluation form within the next 24 hours after the completion of this webinar, provided you have answered all the polling questions. If you have any further questions or need to view the recording, feel free to email us at support@my-cpe.com. We'd also love to hear your thoughts on today's webinar, and it would be really appreciated if you could record a brief video testimonial in the evaluation form to let us know how we did. Once again, thank you so much for being such a wonderful audience. We appreciate your participation and hope you'll join us again for our future webinars. Take care of yourself and your loved ones. Stay safe and stay healthy. Have a great day, everyone. Thank you, Franco. Thank you, Mashid.